Hello guys, how are you? This is Sarvadra Buying Trades. So today is 31st May and Sunday. Good morning to you. So I wanted to um, just go through the price action of this month, but the mainly since I have started this journal, so I will be looking at like the last leg of price. This was the last leg of price for the month of May. And similarly, I also want to share some observations from price that I had, and hopefully you guys will like those observations. So this was the month of May, and how did we and how can we catch these moves from around here, and how can we catch continuations, and then how can we catch this buy. This might not be very much understandable to you right now, or you might have some understanding of selecting higher time frame point of interest and finding liquidity. But let's look at the price from a very simple perspective. So I will go ahead and open the PPT I have made. So let's see. This is the PowerPoint presentation I made, and then I will be sharing it with you so that you might understand what basically swing points on lower time frame are. Since this is a public journal, so mostly all of this is, um, you know, uh, for my own self, not for you guys, but I want to share it with you so that the future me can also learn from this, and I can map my mind around this, mind mapping around these basic concepts so that in live market I have no issue in identifying these patterns mechanically. So this is what I thought, and then brainstormed, and then I have made these presentations. So future me, this is basic market maker, buy sell models and creation of swing points. There is a deep relationship between swing points and market maker models. So every swing point is a market maker model on lower time frame. That's what we have learned from all the traders. So let's see. So this is the last week of gold, where we created a swing point here on the weekly time frame. So as we know from the uh, time frame alignment, that weekly time frame is aligned with 4-hour time frame. So this was the start of the week, Monday. Monday's high was taken out by Tuesday, and it also created an SMT with gold euro and gold pound. So we have an SMT. So Tuesday confirmed the high of the week, which is, um, you can say, classic selling profile, weekly profile. So classic weekly profile here, then price breaks down, provides a continuation here. This is the leg in which lower time frame we have 15-minute highs swept here, and then market moves down again, retraces back into the IRL and then moves down. And then on Thursday it gives us that reversal back towards the weekly open and the opening gap. So let's understand how this price action worked um, on the next slide. So first of all, you have to understand that price is always moving from one key level to another key level. To define it mechanically, you can say that whenever price enters or it taps into a higher time frame key level, then price is expected to move to a medium time frame key level. So in this case, when gold moved into discounted monthly consequent encroachment, then we expect gold to at least move towards the daily rejection block because that is the first premium available for us, and also this 4-hour fairly gap is the first premium, since if we mark out the equilibrium from Tuesday high till Thursday's low, then we see that 50% might lie around here. We have failure swings here, and then we have a premium fair value gap here. So selection of key levels is important whenever you are anticipating a reversal. So selecting discounted and premium PD arrays based on your direction will always help you catching the best reversals and continuations along the way. So this whole week created a swing point, and how this weekly swing point is a 4-hour market maker by profile, that is the question. So this is market makers basic cycle. So first of all, we have consolidation, which leaves liquidity on the table. If you go and look at this month, you will notice that we have a 4-hour fair value gap, and we created one, two, three, and four tops here, which price left intentionally and created the high of the week on Tuesday for classic weekly profile. This price did intentionally. When you know price, uh, what is the intention of price, then you can play these manipulations also, and then you can also trade the expansions and then the reversals also. So in the basic cycle, what you have to understand is price will create the consolidation, then it will manipulate into the higher time frame key level. From that higher time frame key level, we will get our reversal here, and then expansion towards the drawn liquidity, and then continuations along the drawn liquidity. This is the basic cycle of market maker buy model or sell model. In very simple words, this is only one cycle. Like price can do consolidation, then expansion, then second consolidation, then expansion, then third consolidation, and then expansion, and then a smart money reversal, and then move up, and then provide continuations along the way. But this is the basic and simplest example of market maker model. You can also say this is not the consolidation. You can take this opening gap, or you can say this candle. If you observe, this candle's range is not broken, and all of these candles are inside this candle high and low. So this is the original consolidation, this is a breakout, this is retracement, and then this is the breakout, retracement, and then breakout here, and then we have reversal towards the original consolidation. So this is the whole basic cycle of market maker, buy model, or a sell model. Now, from the we observed the price axis of price when price is doing this market maker models. But how can we anticipate when to catch reversal or continuations? This is where the time alignment comes into place. If you know time dilation theory, then you might be knowing what I am about to talk about. You might know. If you don't know time dilation theory, then it's okay. You will learn uh, from Twitter, from Telegram. There are many other sources. Okay, so we have this market maker model on time axis. Higher time frame is gray, medium time frame is orange, lower time frame is white. Remember this. So on convergence of higher time frame and medium time frame time alignment, we get a smart money reversal from key level. So you see here, this is the higher time frame, and then this is the medium time frame. Higher time frame was weekly, and then daily was the medium time frame. Both of the times, the 13th of both time frames, daily and weekly, aligned on this specific day. This is 1800 hours, and then the day started here and ended here. So this whole day is day 13 inside the 13th week. So if we observe the market maker sell model and then buy model here, we observe that price created the sell model using the classic counting. We get 1, 7, 13. 13 is the continuation. Day our day opened, and then we get 15 and then 17 after the reversal. After the smart money reversal, we get 17 here. Price creates the continuation and moves towards buy side liquidity. And then from if we count from here after the smart money reversal, we get 1, 7, and then 9. These are continuations towards the buy side liquidity. So this is a simple market maker sell model or buy model on the time axis of knowing the first basic three steps, that price is drawn towards a higher time frame key level after creating a consolidation helps us catch the initial side of the market maker model, and then confirming the reversal, it gives us the continuations towards the other side of the consolidation, which is the market maker buy model. So remember this one liner: 1, 3, 4, 7, 9, 11, 13, 17, 21. Always expect entries on 7, 9, 11, 13, or 17. These are the entry points. Align your price using candle closures and higher time frame key levels to get the best entries. So to better understand this, remember this one liner, and let's move on to the next presentation where I will tell you what basically these countings are. So the two classic uh, models that we have are classic buy and classic sell model, and then a variation of these are continuation buy and continuation sell models, and we are moving from IRL to ERL. As you might have seen and learned on YouTube, shout out to T Trades, GXT, MMXM for all these concepts. So whenever we are moving from IRL to ERL, then We first have to understand what is IRL. IRL is fair value gap or old high or low in a front leg. You can say a front leg. So these are classic buy and classic sell models. So let's say price is moving in a bullish trend, then a fair value gap created is IRL, and then ERL is the weak high or old high in a bullish trend. Similarly, if you are moving in a bullish trend, then we have the previous low, or yeah, you can say previous low as IRL if price sweeps out that low and then breaks out of this range, or you know gives us an MSS, then we can catch continuations from this whole low and then move towards the ERL or higher time frame PD array. Similarly, for classic selling model, when you have a fair value gap that is IRL, then we expect price to move down from this IRL, and when we have a selling trend, then continuation will be taking out the previous high and then creating a continuation from a fair value gap or order block towards the ERL or higher time frame PD array. So remember that swing points are market maker models on lower time frame, and when we reach the point of internal range liquidity, we expect from price to create a swing point, since swing points are the reversal points. Without a swing point, price cannot reverse. So if you know about swing points, then you must know what is candle 2. So from these examples, observe these 2 points when price is tapping back into the fair value gap or order block. So I have written 7 and 9 here and 13 and 17 here. If you will count the candles from this low and you get 7 or 9, there is no 8, there is 7 or 9. Observe what the 7 and 9 candle is doing. If it is a candle 2, then price is aligned with time, and you will get the next candle, which is the 8th candle, C3 candle, as continuation to move up. If price is delayed, then you might see ninth candle creating the candle closure and then 10th candle as the continuation towards the upside. Similarly for these 13 and 17, so if time is delayed or hastened, we can see 7 or 9 or 13 or 17 providing continuations in C3 or C4 candle. Added confluence can be SMT and PSP at swing points, which is a concept greatly taught by GXT and so there are many other good traders in market, but this is the basic classic silent continuation sell model. So some of the examples that we saw in the last month of May for gold was these 4 main examples. So this one was I took this entry from here, like the pinpoint high, and then I held it somewhere here. So this was one of the entry I did take. Um, I don't think I took this one. I anticipated this one, but I didn't take this one. I anticipated this one, but did not take this one. This was like 3 a.m. in the morning, my time. So, and this one I also anticipated because it was a clear classic weekly profile. So let's look at these examples. So we are moving in a downtrend. We have an IRL. So you see how one, two, three, four, five, six, and seventh is the reversal into expansion candle. So we expect movement on seventh candle. Here again, we have a fair value gap. We have a failure swing and then failure swing here. Like we have double tops. When price comes into the fair value gap, it sweeps out this high. This is not a market structure shift because this is not a smart money reversal. So we know that this is a liquidity sweep. This is a continuation model. So in continuation model, we see that price moved down, moved up, and then moved down. So we will start our counting from here. So we get 1, 2, 3, 4, 5, 6, 7, 8, and then 9. So remember that I told you that whenever we are interacting with the IRL, we have to observe these numbers also. So 7 did not interact with the IRL, it did not sweep this high, so 7 is not my area of interest. I am interested in 7 or 9, so automatically I know that I have to move towards 9 now. So 8 taps into the Fibonacci gap, it sweeps out this liquidity, creates an SMT with a gold GBP. This was an SMT, and then we get a C2 closure here, a candle closure. So I know that this is my reversal, and ninth will be my continuation. So time is delayed here. If time was perfect also here, then this candle would have been 7 and I would have got continuation down. But time was delayed, so I got continuation here on ninth candle. So again, this example, we had a huge consolidation here, but if we count the consolidation also, then we get 1, 7 into the IRL, then consolidation, and then we get one more tap into the IRL. Price breaks down, creates an order block or CSD after C2 candle. This is the C3 and this is C4. So remember I told you that when time is delayed or price is consolidating, when time is distorted, then we will get continuations in C3 or C4 candle. So this is 1, 7 and 17. Remember the sequence 1, 3, 4, 7, 9, 11, 13, 17, 21. And then this is an example of previous day high SMT or previous week high SMT. Then price moved up. So this is also a continuation since we are sweeping out these highs. So we can count from here 1, 2, 3, 4, 5, 6, 7. 7 is by signal. This was um, 6 a.m. candle, and then this was 10 a.m. candle. So it was a clearly bearish trend, so I was expecting sells, that is why I took the sells here. So when price created this SMT and then lower time frame was also aligning here, so that is the reason I took this sell. So remember how I said that in continuation expect price when it sweeps out the previous high to create your candle closure at the specific time. So this is 7, 8 created that swing point, and then 9 is your continuation. So this is your signal you have to enter. You have to confirm this candle's high and then let the trade run. So these are some examples from of continuation and classic sell model from the month of May, since the monthly candle of May was mainly selling price action, so I didn't have any buy examples. Higher time frame buys and drawn liquidity are important factors to understand where it will form a continuation or a reversal. Since a continuation is also a reversal on lower time frame, so it is important to understand this market maker model also. It is not necessarily important to catch the top or bottom, but it is important to allow flexibility during trading and catch the continuations as shown in the example. So I don't have to catch this pinpoint high or this pinpoint high or this one or this one. I have to allow flexibility for myself also and for the price also, so that it can show its hand and then catch the continuations here on the times, having confidence on the time sequence. So notice how these points we have candle closures at the point in time that is 7, 9, 17 as shown in these examples inside of the key level or after a sweeping high or creating an SMT with a high. So protected highs are created inside or inside a fair value gap or IRL or after sweeping a old high or after creating an SMT with an old high. And then when time aligns also on that swing point, then we can play candle 3, candle 2 or candle 4 if time allows. And another confluence we can add is SMT or PSP on the swing points. It will give us much confluence and price can uh, move in our favor quickly. We will be in line with expansions. So this was totally the, you can say, my findings and observations from the month of May, and mainly the important thing to understand is that there is no room for fear. You have to accept the risk and you have to accept the loss also, and wait for the market to clear show its clear hand, and then also you have to hold your trades to make profits. This is the psychological perspective of what I have learned in this month of May. So I hope you guys understood, and keep grinding everyone, as it is important, you know, there is nothing else other than grinding. So yeah, public journal entry for the month of May closes here, and let's see you in the month of June. Thank you.